Tata Steel reported a profit growth in the September quarter, contrary to expectations. But that was owing to a one-time tax gain. If you look at the operational performance, EBITDA fell to a 11-quarter low. Nikki Mirchandani, who was telling us about what to expect from Tata Steel, now joins in with the fine print. Nikki, good morning. What stood out?
Actually, the numbers were pretty bad, and I can't really take heart out of the commentary also. Even if the brokerages make some kind of relief, do see some relief coming out of that, but it's mixed on that level. Let's address the basic numbers first, because clearly the disappointment has kept in from the operational performance of the company. It's essentially the higher inventory build-up, the weaker demand, and the liquidity pressures combined together weighing on the earnings of the company. Revenue, we've seen a 15.4% downtick. Net profitability on account of that deferred tax gain, they have risen by 15%. The number has come to around 4,144 crore. As compared to an estimate of a figure sub 500 crore. So clearly there is a beat out there, but that's on account of that exceptional item there. Reported EBITDA has come down to 56% to a number of 3,800 crore, which is the lower EBITDA that we have in at least 11 quarters now. Margins, for that matter, they have shrunk. If you look at the EBITDA breakup of the company, just to understand where the disappointment essentially is coming from, while all the divisions on YOY basis, they have clocked in and decline out there. But then standalone basis and for Bhushan Steel, the numbers have been pretty much in line. In fact, for European business too, we were estimating a EBITDA level loss, and there is a profit out there. It's clearly the other businesses out there which have led to the higher expenses and weighed on the operational performance of the company. But then essential point here is the debt performance of the company. Now remember, Tata Steel is mostly equated with the kind of leveraging position that the company has on its balance sheet right now. Gross debt, that has moved up by 10% from March to September 2019. And what essentially the company has said that it's going to be recalibrating that $1 billion mark plan. I'm going to buy a moment here, Neeraj, and go on to say that back in June 2019, when we did an annual report analysis, we put out and said that the annual report at that point of time on its debt reduction plan was clearly not ambitious, focused, and the targets look very ambitious at that point of time. We did an interview asking them how they're going to go about with it. They sounded confident, they gave us way, but then they did not give us the figure. So which made us feel that this mark is going to be an ambitious one. And come September, we see the recalibration happen. We saw the capex plan. They said that they already have revised that down from 11,000 odd crore to 8,300 crore, but they said there is going to be a further potential for the capex to come down in order to recalibrate that debt requirements. In terms of commentary now, they said that they're going to be looking to increase the export volumes. Now, export realization or export HRC prices is around 3,000 to 5,000 rupees per ton lower as compared to domestic prices. So clearly, if they're increasing that share, that will be on the operational performance of the company. Also, if you look at what they said for auto industry, they said they're seeing some signs of recovery. Recovery will fully come in the coming months. That's the expectation. But at this point of time, the state still remains fragile. The contracts are lower. H2 contracts are lower than H1. So net-net, they're not seeing essentially good demand outlook also. Domestically, they said that they've hiked the prices, but whether or not the market will be observing those prices, that again remains to be seen. So net-net, if you put all the things in perspective, you would realize that the commentary also is not that encouraging. They have given the flagged issues on their recalibration of debt. Capex will be compromised. I don't know what good thing can you see from this number, even if you go on to argue that spreads are going to be now essentially higher because costs are coming down, but it's going to be taking a long time.
Are brokerages as negative?
Brokerages have maintained their rating, they have maintained their target price, but then if you look at the commentary, it's pretty much their writing is on the wall.
Okay, let's wait and watch how Tata Steel reacts to it. Nikki, thanks so much for putting that into perspective.